General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, let's do this chart work. Today's Friday, August the 7th. The anchor point was still Wednesday. That high held. So into the data. Today's NFP was meaningfully weak. When you line it up with Wednesday's ADP report, the story is actually pretty consistent. Hiring is slowing hard. NFP 23,000 jobs in July, about plus 80,000 expected. June was revised from 57K to 20K, and May from 129K to 63K, a combined 103K revision. Unemployment fell from 4.2 to 4.1, but that wasn't as bullish as it sounded. Labor force participation rate fell to 61.4%, and household employment declined about 87K. In other words, unemployment fell partly because people left the labor force. Private payrolls. This is the important comparison. BLS private payrolls were actually plus 30K. The ugly 23K headline was heavily influenced by 53K government jobs, especially local government education. Wednesday ADP showed plus 44K private jobs in July. ADP uses actual payroll data covering more than 26 million employees, but I wouldn't call it strictly more accurate. It's a different survey and specifically measures private employment. Still, plus 44K ADP versus plus 30K BLS private payrolls is remarkably close directionally. Both are saying private hiring is weak. Wages. BLS wage growth slowed to about 3.2% year over year, another cooling signal. What this means for Wash, which is actually good for Kevin Wash if he wants to keep rates unchanged, but bad for the argument that the Fed needs to hike immediately. Remember the setup. Wash held the funds rate at 3.5 to 3.75 on July 29th, while three Fed presidents dissented because they wanted a 25 basis point hike. Today, report gives Wash ammunition to say inflation is too high, but the labor market is weakening enough that we don't need to rush another hike. And the market immediately agreed. The probability of the September hike dropped to about 44% from 54 before NFP, so the market flipped back towards to Wash holds in September. For 2 years, this is probably the cleanest signal for what the bond market thought. Yesterday, the 2 year closed around 4.24. After NFP today, it dropped below 4.17, roughly 7-8 basis point decline. This is important because the 2 year is heavily driven by expectations for Fed policy. 2 year falling equal market prices less Fed tightening. So macro story coming out. ADP Wednesday week, BLS Friday confirmed week, headline very weak. The prior revision labor was weaker than we previously thought. The 2 year market reduces hike expectation. Wash much stronger case for holding September. The one caveat is inflation. Wash hasn't necessarily been handed a reason to cut base inflation is still the problem. The report mainly weakened the case for hiking. Next week, CPI, PPI becomes extremely important because soft jobs plus soft inflation will be very bullish for bonds and Nasdaq, while soft jobs and hot inflation puts Wash right back into the nasty stagflation style dilemma. So right now we got soft jobs. If inflation comes in bad, we're gonna be talking about hiking rates. Today's combination of falling 2 year yields plus reduced hike probability was favorable, which helped explain Nasdaq 1% move today. So charts this week was pretty one-sided. Most of the rest of the week after Tuesday was boo-boo. So week or NFP week protocol is still true Monday, Tuesday, Wednesday, Thursday compressed for Friday. Week one in the books, NFP didn't cause a panic sell-off and prices still in Tuesday range expansion. Closer look at the H1. See right after the data reaches chopped. Seek and destroy, look how after the news release we chopped inside that range. This one was created at 10, but still not much for the delivery for the day. SPX, much stronger. A Green Friday is interesting. No one wants to take off anything before the weekend, even with the Iran conflict. SPX on the H1. It was kind of a nothing day. I don't even think we got previous day low. Seek and destroy RTH vibes here as well. Yeah, not much here. It's Friday. Look at SPY. Strong close on SPY. NVIDIA, we finally put a body through here. We got a clean shot to 232, but I still expect some type of pullback. I like buying here still. Now that we kind of open above this gap, we could see a retest of it. Okay, that's an order block. Gold is probably the most interesting because we started the week looking for this and it happened. We took out this. We didn't made it to the daily fair value gap, but can't expect everything in this week. So it's up under the 200. It's load them up time. Swing trades. Swing this to Christmas. We rallied into NFP and stalled. That's also important. So even before NFP came out, it was just going up. We didn't even care. It came out. We stalled a little bit, but it's like, all right, let's keep going. Yeah, today was a no trade day. NFP. Did the framework play out? Yeah. What did we learn? ICT, he was showing the 2 hour cycle, the 79 cycle this morning. Very interesting YouTube video he put out. So that was interesting to study that today. What will I watch for tomorrow? Study day, catch up on the new ICT. He got some Twitter spaces I got to finish up on too. All right, that's that on that. Have a good day. Peace.